Bitcoin finished May in the green, up 11%. So what does that mean for Bitcoin in June and for the rest of the cycle? The data in today's video might shock you, but I guarantee you will find something that you absolutely love. We've got a massive video to get into with the data covering Bitcoin across the timeframes, the price scales, market sentiment, news, theories, cycles, Elliott wave, lots to get through. So smash up the like button. Let's go for 3,500 likes. It is helping out the channel a lot to reach a wider audience, to avoid the traps, the hidden traps of the ends of the cycle. The times when investors get extremely bullish and extremely bearish, that is what we're trying to avoid here and make money from the markets. It's your home of macro cycle analysis with me, Jason Pizzino. We're covering Bitcoin, crypto, the stock markets, and of course, the real estate cycle. Today's video is focused on Bitcoin, June in particular, what happens over the next several months, and of course, the end of the cycle. This is a series I cover every single month on the channel, so thanks again for your support. And if you are looking for references, check out the video description for links. This was the last video we did at the end of April for the month of May. This is the contents for today. It's quite substantial. As I said in the intro, a lot to get through. The first thing we're looking at is my Bitcoin cycle theory, a review of the previous theory and the current theory to see how it's been progressing. Then we're going to quickly get on to the macro interest rates, ETFs, USD, forward returns table. Now that is a tool that is exclusive to TIA, and you can find a reference to that in the video description underneath TIA indicators. We're going to look at the monthly returns, consecutive red versus green months, as that shows something pretty interesting. The 6 monthly returns, if you were to buy in June and sell at the end of the 6-month period, and then also the 12-month period, what that would look like over this period. Number 4, market sentiment and the changes that we have seen over this stage of the cycle, at least over the last 3 months, looking at how the shift occurred from extremely bullish to where we find ourselves, and a massive one in the Google trends, something that has not shown up for a very, very long time. Number 5, we're looking at time for the cycle, end of cycle, conservative targets, best cases, whether that's still in play from previous months or if anything has changed. Swings on the chart, which has helped us time that March top, let us know that things were getting a little bit overheated. The waves towards the end of the cycle. Then we get into some of the price targets and some other interesting charts that I have seen around the traps. One quick warning on price targets. I know it's what everyone is looking for. Price targets are essentially bull porn. I would strongly suggest staying well away from any sort of price targets. And I find it so much easier talking to people online at this stage in the market when it's not so hot and the greed isn't there. When we get to the peaks, everyone is just looking for price targets. They want to know what is it going to go to tomorrow. Price targets have been the worst type of analysis that I have seen over the last 7 years in Bitcoin and cryptocurrency. Maybe you've experienced the same thing, but almost everyone gets it wrong. And I want to show you a better way to understand or identify when the market is turning. That's how we've been doing it since the lows, which leads me to the previous and current theory for Bitcoin. As I see it, there has been 5 key events, and it seems like we're in that 6th key event. This is basically looking at the theory for the Bitcoin cycle. The first was the capitulation. This was in 2022. So I'm going to run through this relatively quickly because it's, again, just a review so we can get all up to date. Markets capitulated, cryptos capitulated. May and June, market went quiet. Bitcoin and cryptocurrencies went quiet. And then we had the next event, and that was the FTX collapse. From that point, even from June, I was thinking that this was around the lows based on what I'd seen with the price, time, type of events that had occurred. But in terms of time, it seemed like it needed a little bit longer. I had no way of knowing that the market would go lower, that it would hit 15K, but that's what happened. And so we got out of that cycle low and the conditions really did change from early 2023. But we do note that the majority were looking for a recession at that time. Things were going to collapse. On to event number 3, and this was the banking crisis in March 2023. The market showed us that it was a non-event. It was a non-crisis. It was a nothing burger because it pumped and closed higher. This is where I got very, very bullish, basically at this March low, and we saw the breakout. So this led to that next period of time where we had this huge consolidation of about 7 months before we got to event number 4, where October broke out. So this is where things really started to kick off, and a little bit of the public interest got involved into that ETF top in January, which then led to February, where I see another event occur there where we basically broke out of the 40 and 50K regions, got very, one of the biggest bars that we had seen, and then we got to that peak in March. So that's basically where the extreme greed really kicked off, and then we got into that peak of March. Now we're into our, I think it was 1, 2, 3, 4, 5, 6th turning point. And this could be the period where the market consolidates again before another big breakout. Is it going to happen in June? Is it going to happen in July, August, September? We will have to wait and see. And there's a little bit of data to suggest what could be happening over this nearly second half of 2024. But I think we're now into this next event, which we'll look back on in the months ahead as we lead into the end of the cycle and think, why didn't we see this any more clearer at the time? So that's a recap of the previous theory that I had, which had moved into the current theory where I still think we're in a macro bull market based on the turning points of the market. So into the macro, and how does this all unfold as the stock markets and the real estate cycle also have to continue on. We still need to see a macro cycle in the traditional markets as well. This is not just a Bitcoin crypto game. It's all encompassing now. So this is a quick look at the 18.6-year real estate and economic cycle. Note, I didn't say stock market cycle, just real estate and economic cycle. We're somewhere around here now. There's a few little movements up from that point, but we're basically in this final stage. So wherever we are, you want to call it here, you want to call it there, whatever, somewhere at this earlier stage of this final move into the top, which then leads to the biggest correction that we would have seen in the last roughly 20 years, the longest and potentially the largest as well. The longest correction we've seen since 2009 has been about 10 months. We really haven't seen anything too much longer than that, than what we saw in 2022. And I think that next collapse is going to be the big one, which could affect Bitcoin, and Bitcoin hitting another all-time high after the current all-time high that we have been in. But we've got some time to get there. Essentially, this theory is still on. 18.6-year cycle is still well and truly heading up, and that I think is going to drag Bitcoin and cryptos along with it. Onto the interest rates. And the theory, again, from the earlier this year is that I did not think interest rates at 5.5% were going to get cut based on how high asset prices had gone. Now, there's several other factors that go into that. People bring up how the economy is doing, which is actually doing relatively well, considering, all things considered, of course. The feeling out there might not be the same, but essentially what I talked about in January with receipts on X and YouTube is that we weren't going to get cuts because everything is still too hot. We're still in this macro everything bubble, this bull market that is just continuing on, but is taking its time. I don't think we're going to see these cuts. Maybe you see the cut down here, but as we know from the beginning of the year, there was a cut due for every single meeting in 2024. It hasn't occurred, and it doesn't seem like we're going to get that many cuts, if any at all, or if we do get one, maybe it's just a bit of a token offering for the election that's coming up in November, and the markets might rise from there. And as they quickly find out, it's probably best not to be cutting the rates when asset prices are extremely hot. And that also just continues to lead up into this peak here. That leads us on to the next point. So we looked at interest rates. We've got ETFs and the USD to have a look at here. The headlines are still all roughly the same. ETFs are still here. Positive news, Bitcoin price hasn't really changed. It's been pretty boring for the majority of people, just sitting around 67, 69K. But as I pointed out with the average true range of the chart in the last couple of videos, I think we are building towards a big move out of this current range between this sort of 56 and 74K level. Eventually there'll be a big move, and the big move I think is to the upside. So I think that's probably an important one to note as well. Most people are sort of wondering, is it going to be up or down? I think eventually we're going to see an up. And in terms of the ETF flows, well, they've been positive, but barely anything at all. And I wouldn't blame them because essentially the market's been pretty dead and boring. It's just been ranging now between 64 and sort of $70,000. So not much has really gone on. So that's a quick look at what's going on in the macro space. The news headlines are still good. ETFs are still there. Nothing has really changed. And also the price of Bitcoin hasn't really changed. As for the US dollar, we have seen a correction on this. And while it was taking a step back, while the US dollar was going up, as I said here, US dollar up, asset prices generally go down or pause. We did see a bit of heat come out of the stock market. We saw some corrections and then, of course, move up again and then another correction. But the Bitcoin price had been holding up relatively well, which, as we've seen in the past, if you're getting pressure from the US dollar, yet your asset has been holding up and not capitulating against a strong US dollar, eventually the probabilities have shown that it turns into more of a bullish move. So I think there's some underlying bullishness here where we've seen the US dollar rise, but Bitcoin has remained in a trading range above sort of 56,000, more around that sort of $60,000 to $70,000 level. So eventually, when this breaks down, as is part of our real estate cycle theory in the second half of the real estate cycle, so right here, the US dollar typically breaks down. It takes time. Remember, it's going to take many months. Once it starts to break down, that might show more bullishness for Bitcoin and cryptocurrencies as well. So we've got that, the theory, we've got the macro. Time for the forward returns now. Now, this tool here is part of TIA Indicator Suite, which is coming out very soon. So if you do want to be on board with that and use this for your own trading and investing, I suggest subscribing to our free weekly report and you'll be notified once this is live. The forward returns table has a plethora of data to use for your trading and investing, and it can help out those long-term strategies of yours to understand whether now is a good time to be getting in or getting out, or maybe you want to have a longer-term horizon looking out, sort of 6 to 12 months. And so what we're looking at today is the month of June. And with June, you can see that there's been, let's take off 2024, there's been 13 events of Bitcoin trading in June, 8 of which have been green, 5 of which have been red, giving us a 61% chance that it's going to be a green month. But what I like to use this more so for, and rather than just saying this month has to be green or this month has to be red, like is the case for September, which last year it wasn't. And I talked about that at the time as well and suggested that maybe September wouldn't be red. I like to look at the month prior. What happened? It's basically, you're trying to figure out what the story is, as opposed to what happens every year like this. It's like, well, what was the story prior leading up to this point? And what the story has been was a green May, which when we look at the data, what May has done in the past has typically been what June will also do. It's not 100%, whereas nothing is. So you can see May here was red, but then June was green last year. And then May was green in 2020 and June was red. And another one here in 2015, red, then green. However, when you see a red in May, red in June, red in May, red in June, red in May, red in June, green in May, green in June, green in May, green in June. You get the picture here. Whereas more often than not, you're going to see the same thing that happened in May happen in June. So it's possible that we do see a green June based on the last 13 years of Bitcoin price data. Now, if you want to take that a step back, April was red. We don't have any other times in history where April was red and May was green. When April was red, May was also red. April red, May red, April red, May red. So looking at this, there is a higher chance that you're going to see the same thing that happened in May happen in June. However, do note there were those 3 occasions out of the 13 that did not show that. Onto the 6 monthly data. Now, we just click through here to find June. So this is the period going from the beginning of June to the end of November. We take out the 2024 because obviously this hasn't occurred yet. Gives us 13 results. Again, 8 green, 5 red. Now we can go a step further and take out the bear years. I don't anticipate 2024 is going to be a bearish year, but of course you're going to have to and understand that for yourself. Maybe you think 2024 will be a bear year, therefore this is going to be irrelevant to you. But personally, from what I've seen and across the cycle itself, leading into this macro massive bull market, the same thing with the stock market, as I talked about 2 years ago now, you guys have seen that on the channel, while everyone was talking about a recession in 2023, the data suggested otherwise. So as for Bitcoin over this 6-month period, once we take out the bearish years, we're left with an 80% hit rate from June to November being positive. So that's one of the first big pieces that I suggested in the intro, that over this period, if you had a longer outlook, say you're 6 months, it's likely going to be green. But it doesn't necessarily mean that we go straight up. I think we are in this stop-start type of environment where the Bitcoin price had moved and we get this big move, say out of March 2023, and then it basically stopped for 7 months. And then we had this huge move of 6 months from October into that March top, and now we've stopped for 2 months. Now we could keep ranging here, as I'll show in a moment, but eventually, I think over this period, if you've got a long enough outlook, I think we're going to see green based on, again, what I'm looking at here with the data. So 8 wins, 2 losses. So 80% hit rate for a green 6 months. As for the 12-month period, again, I'll take out the red years. So 2022, 2018, 2014. And I said red years, I mean bearish years. So looking at 2018 as being a bear market year, even though it was green. Same data again, 80% with 8 wins and 2 losses in that period of time. We leave them all in, and then you're back down to a 69% hit rate. So a June to end of May period has also been a pretty good run for Bitcoin. So far, the theory has been looking good. We've been on track for the macro bull market. The macro itself, just looking at the interest rates, ETFs, US dollar, everything's been on track to provide a flourishing environment for this everything bull market. Doesn't mean things are healthy and we're not going to see a collapse. I very strongly believe we're going to see a pretty significant collapse. Things can't go on forever. But while they're going good, well, you might as well be on the bandwagon with the bull market. So we've done that, and forward returns also look relatively healthy. Nothing's guaranteed, but they look relatively healthy. Now it's time to hit the market sentiment and the changes here. So we've done about 180% from that October breakout, and that's really where we saw the market sentiment change. That was the first change there, the October break, and we had a lot to do with the Wyckoff analysis here, where I was looking at the accumulation occur and then the breakout, and essentially that's what's happened. Most people were looking for a redistribution here and then a collapse, but of course that didn't happen, and we got the breakout. So 180% from that first initial market sentiment change. Then we got really ridiculous at the tops here, and of course we had to have that cool off over the last couple of months. Now this is the left and right translated cycle. Remember at the peak here, maybe you were here in March, maybe you weren't. If you weren't, this is really, really important to note. Because of how strong everything got, how ridiculous the prices went, people thought that this was going to be the end of the cycle. They thought we were going to have a left translated cycle, and what that means is that typically we got just over 2 years up, so sometimes 3 years, often 3 years, and then a 1 year down. And that brings on the 4-year cycle, not the halving cycle. Forget this halving thing. The halving cycle, put it aside. 4 years, low to low, okay? And so as we got this really big, strong run up, they all thought we were going into a left cycle and that there was going to be a long period of decline. Now, although that could still happen, so that's still a possibility. We haven't broken out to new highs. It doesn't seem likely at the moment while the price remains above the low at 56, or worst case scenario, above the monthly swing top and then the other swing top of the ETF, which is about $48,000. Okay, so while we're up here, it doesn't seem likely that we're going to get a breakdown. The same thing happened in the last cycle where there was a fast 6 months up. A lot thought that we're going into a left translated cycle and then basically just flatten out for 3 years or 3.5 years before we went on this next bull market. And that didn't happen again. So this leads me to the other point I was mentioning in the intro about this stop-start theory. So we had the market basically take off, and it stopped in April at the peak and basically went dead for about 7 months. And then we started again while no one was watching. Things took off. A lot of people kept trying to short this on the way up, and they got destroyed, absolutely destroyed. And now we've stopped again, but we haven't started to collapse. Maybe we do. I don't know. I don't think so based on what I'm looking at. But again, we're into this stop area of the market. Maybe we start to go again. And I pointed that out with the average true range. So taking a step back to the last couple of videos, where this basically drops off and we get into some low point on the average true range. So the bars really do die off. Like we saw on Saturday, there was only a few $100 on that daily bar. And then when people aren't watching, Bitcoin takes off, they all try to chase their tail, and generally they do that at the peak, and then you see it stop again, correct, and then it starts again without them on board. And I think that'll happen again, as it has done throughout history on basically every single market. When people aren't ready for it, that's when it basically starts going. And it looks like we're getting into one of those positions now. So in terms of the left and right translated cycle theory, I definitely think we are still on track for a right and not a left. Now that leads me to Google Trends. And the Google Trends is now at its lowest level since October of 2023. Sorry, it took me a while to say that. Here we are, October 2023 was at 18. Now this is all relative. It goes from 0 to 100, and it's relative to the highest time that Bitcoin was searched, so the highest volume of Bitcoin search history in the last 5 years, and that was in 2021. We're now at 17. And the last time we were under 17, or at least for this longer period here, was in October 2023, when things were very, very quiet. That is here, October 2023 at the breakout, that September low, before a major pump. Does that mean we pump this month? Let's wait and see. But at least if you're positioned to be on the right side of the market when that happens, and you've got some entry signals, maybe using your Gann swing indicator when the swings break, then I think you're going to be pretty excited by that, rather than chasing your tail as the market heads up, thinking that it might go lower. So we're at 17, that price was 18, and through this period, as it was tracking down through August and September, it hit 17, 16, 15, and stayed around there for about 2 months. So I've got that in the back of my mind for 2 months, because that was also part of my theory as we're at these tops. After a 6-month move, how long does the market typically correct for, or at least stay in a trading range? And that trading range could go slightly higher than where that current price is, but essentially remain in a trading range. And that, now that we've seen this massive signal here with how the sentiment has dropped off after just 3 months ago, it was ballistic, that leads me into the swings. So we've got some pretty decent swings happening here and a lot of data. I know this is not going to be under 30 minutes now because I've got a lot to get through, but hopefully you have been finding value from it. Smash up the likes. We're going 3,500, and of course subscribe to the channel. If you find value, please share it with a friend on X or email, whatever suits you. Okay, so Bitcoin, the swings here, how long does it stay underneath these swings, or I guess in a trading range? Well, we had 6 months up. Now, what I looked at before were these two areas, and again, I was laughed at those periods, just saying that, look, it happens and the market does go quiet for several months. You get a correction and then it needs time to build up and then break out. And again, I referenced 2012 and then 2013. So you had a pretty significant move up and another one up, and then the market needed time to cool off. This one here was 4 months of cool off with a 2-month-ish correction, which was 30+%. The next one was about 5 months of a trading range, 3 months to that move to the downside, to this low, and it was about a 40+% correction. Now we've seen a 23% correction in about 2 months. Times have changed. It's not 2012 or 2013 anymore, but it's still the most significant correction that we've seen in this entire move up. And in terms of time, it's equal to the last 2 corrections here, the April to June, and then the July top down to that September low as well. So we're within the range there, but do we need a bit more time like before? And so what I bring up before, so the move we just had, that stop-start move, the price did go slightly higher. We had April top, 2-month correction, and then it went slightly higher. So that was 31K, went slightly higher to 31,800. And the market then corrected after that point. So what if we did something like that? People would be like, it's all back on. We're back on, we're moving higher. Oh, we hit 78,000. Maybe we hit 81,000, as I'll show you with some price targets in a moment. And then it corrects back into this zone for another couple of months into the election. I don't know, I'm just playing out some theories here, but provided it doesn't break down from 48K overall, then it can do whatever the hell it wants to do. We're still in a macro bull market. So I think it's just something to pay attention to when it comes to these trading ranges over the couple of months. Now, the best case scenario, the easiest thing, it breaks out and holds above these levels, and then we don't have to worry about any of that. It's up, it's holding on, and then it's going to continue to grind higher like it did in 2017, where it basically broke out, put in higher lows, higher lows, higher lows, and ran into this top. But so far, although it's been similar to 2017, we're definitely getting this pump and stop, pump, currently into a stop period, like it did early on in that 2017 cycle. So that led us to the next swings and the probabilities of months in the correction. So when we had 6 months up in a swing, there were 7 green months, 1, 2, 3, 4, 5, 6, 7, but I'm not referring to the green months. I'm talking specifically about months in a swing. So that was the low, the swing low, and now we had the swing top. So 6 months, okay? This is specific Gann analysis, which I don't really see anyone else use online, but it has been around for over 100 years and works amazingly well. You can learn more about this at TIA Premium, and I use it across all of my trading, my Bitcoin, crypto, and stock market analysis as well. It works on anything that has a chart. It's basically charting human emotion, and Gann did it the best in the world. Okay, 6 or more months in the swing. We've seen this now 6 times with 1 still to play out, the current one that we are in. How many months in the correction? Once we see 6 months up, how many months were in the correction? There was 2 months, 6 months, 1, 2, 3. These are the other times that it happened. There's your 6 months up. There was a 6-month correction. He was 7 months up. There were 2 months in the correction. That's what it's referring to there. So the data we're looking at is right here, and we have 2 months or less. There was 3 out of the 5 occasions, because we're currently in the 6th one. Okay, so 3 out of the 5, 60% of the time, it was 2 months or less. So we're within that 60% now, should May be the low. Now, if it's 3 months or more, it was 40% of the time. So 2 out of the 5. The data's pretty close. It could be a 3, it could be a 2. All right, so there's not enough there to say that it must be one or the other. But either way, it's hit that 2 months now, so it's within the range of a possible low. How many consecutive red months? This time round, it was just 1 red month, and then we saw a green month. And we've only seen that 1 other time. Whereas the other times we saw 3 consecutive red, 3 consecutive red, 2 and 2. So it's seeming like it's a little bit stronger than what it has been in the past, which might mean we do see that other, we see June as being green based on what I talked about here with the monthly of May also having been green. So that could mean a slightly higher price that looks similar to what we saw in that 7-month consolidation, maybe a bit of a correction again to hold out as we get later into the year, so on and so forth. So no warning signs here. Cycle is still on track. That leads us over to the waves and the macro cycle again. So we have the chart here with all of the red arrows. I can get rid of those. And we're looking at the red line in the background. So this leads us to our Elliott wave count, something that Michael has put together, my brother. You can find his link here, and he goes into great detail on his channel about the Elliott wave theory. So we're looking at the theory that we're in, potentially stuck in our wave 4 at the moment. And there's no confirmation that wave 4 is over, but what comes after wave 4 is a move to the upside. It could be very, very significant. It could be similar to what we saw in wave 3, but either way, it's got to be bigger than wave 1. So we've seen 1 into that peak, 2 into the correction, 3 into this peak, 4, which is what we're currently in, could go further because we haven't got the confirmation of the breakout yet, or this could be the low here. So the next stage is looking pretty rosy, also lines up with the end of the real estate and economic cycle as well. So in terms of the wave count, still on track here. The question remains, is that the low for wave 4, or do we head a little bit lower for wave 4 as well? We're going to need to do the end of cycles. So we're at our 19th month in from the cycle low. That's where we currently sit in June. Again, where was the market in the previous cycles at 19 months, etc. And how many months was it until the end of the cycle? And I've got 2 end of cycle targets because I want to have something conservative in case, and then something longer term. I think just having one of anything is really a beginner's game, and I hope that you are progressing from a beginner, or at least you have progressed from that. The beginners, essentially what they look for, I need a definite price and it must hit that, and I need a definite time. And that is not how trading and investing works. It never works like that, and it never will work like that. So you need to be prepared for all scenarios and understand what the probabilities are for each of those scenarios so that you can plan accordingly. That's it. You need to manage your risk for either scenario. In terms of the 19 months, what happened next into the peaks? The cycle into 2017, you had about 16 months to go. And then again in 2021, you had about 16 months to go after that initial 19 months of the cycle. That calculation leads us out into Q4 of 2025. So I think that is the longest scenario here for the end of cycle for an all-time high. But we have other targets looking at the end of 2024 or Q1 of 2025, potential end of the cycle based on a couple of other things here. So in this one, we're looking at a break of the 50% level and how many months left until the peak of that cycle. So the 50% is the bear market range, and then 50% through the middle. Let's take it off log. You can see that it's an even 50% split. And we're only looking at the linear, not the log 50%. I know people love to look at that. I'm not going with the log. It's the linear 50%. This is how Gann did it, and I'm going to follow what Gann's rules were. I'm not going to try and make up new rules to suit something else. It broke the 50% here, and this was around December of 2016, and it lasted for another 12 months into that peak. Using that same theory here, we're just looking at some rough timeframes. That's 13 months into that final peak. And then the 50% on this correction here, which is the previous data that we had, was about 10 months. So although it wasn't the end of cycle bear market, I still wanted to use it because there is the characteristics of the market look pretty good leading into that end of the cycle where you can see things had to cool off. They took a while to consolidate. And then once they broke the 50%, things got crazy. So you can see market characteristics coming into that end of the cycle and how much time was left. So there was about 10 months. So we're looking at 10, 12, 13. 13 takes us out to January 2025 if we measure it from the first touch in December. But if we measure it from the convincing break of February 24, well, that takes us out to about March. So we've talked about that Q1 of 2025 several times before. So there's March 2025 for that 13 months. Now, if we take it 10 months, like we saw with the one of the other cycles, the first one there, that takes us to December 2024. And if we measure it from the first touch of the 50%, stick with me, there's the December bar there. Well, then that takes us to October 2024. So I've got this range of Q4 2024 and Q1 2025 as a conservative target to see what Bitcoin is doing at that time. Does it look like, between now and then, have we had this huge big blow off move and it's seeming like it's over? Everyone's had enough excitement, game over, show's over. Then I would adjust my targets. But I'm not going to try and hold on to something just because it did it last time. I want to see how the market responds over that period so that I can adjust my plan accordingly as well. I don't want to be some fool just sitting here hoping and waiting and listening to someone online that told me it must end at this time. Like that's absolutely ridiculous. As I said, Q4 2024, Q1 2025, and then for that less conservative target, as I've got here, like a best case, maybe sometime late 2025. So the main thing that keeps coming up here is that it's not over. Just like the cycle's not over, this video is still not over. We have got price to get through and then some interesting charts to get through as well. But a shout out to our traders at TIA Premium. Link to this is in the top of the video description. Hammering home lots of profits while these markets are relatively subdued in their trading ranges. And some of them, they're learning a lot along the way as well in their profits, hitting some break evens and then coming back into profits. So well done to you guys. These are all the results since the last time I looked at it. Huge results here from Stephen. Great work there, mate. 300, 100, 200%, huge gains. More and more gains here. If you want to review the results for yourself, use this link, subscribe to the newsletter, and you'll get a link to our free Discord. This can all be seen in the free Discord. The content itself is TIA Premium, which is this link right here. Okay, so this brings us to the price targets. We're on to this, next resistance levels and price targets. The price targets, as we've covered on the macro, haven't changed, and we're looking at $81,000. This is the 50% level, and then the next levels are in the 130s to 150s. Now I'm using the fib retracement tool from the lows to the highs. I've gone into great detail with this on the channel, so make sure you are subscribed to the channel rather than me go through it again in every video and make them an hour long. Just understand that we're using the entire bull market ranges and then also an extension tool and the retracement tool. So the extension tool gives us our first price resistance at around 80 to 81,000, and then some other targets above using the 50% or the 150 and the 200% range are between 100 and 150, with an emphasis on the price cluster at around 130 and 150. So a couple of price clusters coming in there. Let's see how the market responds first to 81 as the first price target, and then in those 130 to 150. And of course, video is not complete without talking about the psychological level at 100. So they're my three significant levels: 80, 100, and then this range here, 130 to 150. I'll call it 4 levels if you wish. Now, on to the interesting charts, MVRV and M2 warnings. I thought this was interesting to look at because what I'm seeing on the average true range, as I've gone through before on the weekly, is that it seems like the market is also moving towards some sort of major move to the upside as this average true range dies off. You know, the interest is lost in the market. So that's the main interesting point there, not to make the video too long, but what we've seen after that is a pretty significant explosive move from there. You can almost see it in 2020 and 2020. You got a move out of the dotted line and then a bit of a correction higher up. And then of course there was still more explosion to the upside there. But I'm more interested in this one here in 2017 because it looks most similar to what's going on here. A breakout, a retest, market to the upside. Okay, so MVRV also looking good. And a warning on the M2. We're on the M2 here. Sorry, this is the M1, and I've also got the M2 to have a look at. I've seen a few posts on X which led me to review it for myself, do my own research, and not trust what those X posts were saying. Very big accounts, thousands of reshares, thousands of likes. And basically they were looking at it like this, saying we got a breakout of the top, whereas it's not a breakout. It's still well and truly underneath this top, and they were using the M1 money supply here, but it still looks good. We still broke above 50%, came back and tested the 50% level, so the halfway point there. It's broken above all these tops, and for the GAN traders, our TIA premium traders, you would note the 1, 2, 3, 4th time breakout is a very strong signal on a monthly chart. So things are still looking to the upside in a pretty big way. So I'm quite excited to see what comes of this. What I would be concerned with is a breakdown of this level. That could spell some pretty big disaster, and that being the top for Bitcoin. But as it stands, 3rd time breakout, retest of the old tops. Things are looking pretty good here for the M1. When it comes to the M2 money supply, again, a breakout of those highs, and it seems like we got a retest of those highs again with a possible move to the upside. We could go parabolic here against the money supply, which is going to be pretty significant to the Bitcoin price. Now, this was a massive video filled with data for your Bitcoin and cryptocurrency trading throughout 2024 with a more deeper insight into June. If you've made it this far, congratulations. Huge clap to you guys. Let me know in the comment section with some clap emojis. It's over 40 minutes for sure, so you've done amazingly well. Hopefully it's been somewhat entertaining and that you've got a lot of value from it. Smash up the like, subscribe to the channel, and share it with a friend that could use this type of analysis. More in this series in future videos, but I'll see you back here at the next one very soon. Till then, take care and peace out.